Hi and welcome to Westpac London's end of day report for Wednesday, August the 24th. Not too much to report today really. It was a bit of a choppy session in a sense. European markets opened up stronger. They hadn't had a chance yet to fully reflect the gains that US markets saw after European trading had finished yesterday. So there's always going to be a little bit of catch up there. And in fact, a very disappointing survey from the iPhone Germany, a survey of 7,000 businessmen. It revealed a real sense of concern emerging about both the current condition of the German economy and about prospects for the German economy. Very steep falls in that measure of business confidence for August. But it didn't prevent the German market from continuing to do okay. In fact, all the continental markets are up 1% or more through most of the morning session. We then had some figures on the US economy. Durable goods orders for the month of July rose 4%. A little bit unsustainable, I suspect, because the volatile aircraft component was a big driver of that, and there was a big bounce in autos after a few months of weakness. It seems the Japanese parts supply problem has now been largely resolved, and we've seen this big pickup in auto orders as a result, but it's unlikely to repeat that sort of gain going forward. So although the numbers look pretty good, you could probably explain away most of the strength. There was also some figures on house prices on one of the government indices there. For 3 months in a row now, house prices in America have actually risen, although they're still down on a quarterly basis. These were figures for June. So the initial response to those bits of information was actually positive, but it didn't last very long. And the Dow, which was actually trading higher in the early part of its session, as I speak now, and it's 4:30 in the afternoon in London, so it's been trading for 2 hours. It's around about flat. It's been a little bit negative actually, and sort of jumping up and down between positive and negative at the moment. So whereas yesterday there was this real sense of confidence that the Fed will do something to signal they're prepared to put in place more stimulus at some future point, and that being a positive for stock markets. Today I think people are much less confident that that's the case. The irony being that the okay looking economic numbers out of the US today perhaps dented that enthusiasm for QE just a little bit, and that's why stock markets have lost some of their glory, some of their luster today. The other big story today, I suppose worth mentioning too, is that gold has continued to fall away very sharply. After hitting $1,900 an ounce yesterday morning London time, it's now trading a bit below $1,800 an ounce. A lot of speculators probably in that trade, and they seem to be looking to exit it. And as always, when you've got a bit of a bubble, you see some pretty volatile movements on the price front. So gold down more than $100 in just 2 days. On the other commodities, just worth mentioning quickly, oil was up 0.6%, $85 and change a barrel. Copper's little changed today. In fact, neither is the Aussie dollar. It's just trading around 1.05 against the US dollar. Probably a little bit below it at the moment because equity markets have been losing a little bit of steam, but it's been just trading a fairly tight range today. There's not much really to look forward to, I think, during the Australian session on Thursday, and only some reasonably minor numbers in the US economy in the Thursday night session for you guys in Australia. So a quick report today. I'll leave it there. I'll speak to you tomorrow.